you can't make this stuff up. You really can't. And I mean, I have never been more terrified for what's coming because it's so unsustainable on so many levels. Everything that they've done, you look up, as you said, historically, you look up 3 months later, to 6 months later, a year later, and things are much, much worse.
Hey guys, thanks so much for joining us. We have Andy Hoffman from Miles Franklin on the line right now, and he's absolutely fit to be tied. Andy, how you hanging in there?
I literally, as we were saying, I literally just finished my own audio blog, which was 9 pages long, because there are so many disgusting, horrifying things going on in the world. Between the market rigging of everything and the just absolutely horrifying news. I mean, I'm looking at the Chinese yuan, which is plunging as the final currency war explodes. The second straight day of a blatant oil price goosing failing. The FOMC statement where they did not take considerable time out, and yet the mainstream media, even Zero Hedge, says they did. And of course, the Swiss National Bank going to a negative interest rate, some of the worst economic data that we've seen all year. And yet they've got the Dow up 600 points in the last 12 hours.
Well, it's insanity, and we've been covering the insanity and the market madness and the manipulation for just as long as we've known each other. And I think it warrants talking about what happens to gold in a currency crisis, Andy. Can you remind people, if you're one of the unlucky people on planet Earth living in Russia right now, can you explain to people what has happened over the last year to the price of gold in rubles?
Yes, well, I mean, I put out an article earlier this week that says the end of the 3-year bear market in gold with quotes around it because it was obviously all orchestrated. But the fact is, gold itself in U.S. dollars is flat for the year, but in all other currencies, on average, it's up 5% because of not because the dollar's strength, because of the global fears of collapse are having people race into the liquidity of the reserve currency. In Russia alone, Russian price gold is up. Well, it was up 80% as of last weekend, but that was before the ruble crash. So it's probably up something like 120% this year. Ruble priced gold to an all-time high, and there's many others. I mean, the Japanese yen price gold is within about 6% of its all-time high. In fact, the average nation on Earth, their gold is only about 20% from the all-time high, from their respective all-time highs. And since we know gold is inelastic, meaning the higher the price goes, the more the demand, there's a lot of people out there that are in earshot of hitting all-time highs, and that's bringing in all this new gold buying. And then, of course, the next era, reemergence of real money, because you're talking about all these central banks demanding their gold back. Now we have the Austrians and the Belgians are going to join the Dutch and the Germans. Marine Le Pen in France wants the same thing, and she's going to be the next president probably in the next year or two. So again, you're seeing sweeping belief in gold around the world. We haven't even gone into the Swiss bank yet and how they duped their citizens, and since then what they've done to the currency, we'll talk about that later, and what it's done to Swiss franc priced gold since. So look, it's unquestionable what will happen. In fact, we just saw just this week, we saw that November gold imports into India, which, by the way, still has those import tariffs, exploded higher. And as a result, not only that, the rupee, which the Indian Reserve Bank was supposedly so protective of, is collapsing as well. So you're going to see the biggest gold consumer in the world also get close to its all-time high in gold soon. So again, all these factors are creating the biggest gold demand in history at a time when it's below the cost of production. And calls around the world for gold as real money are only increasing.
Yeah, and that's a fact. And you cited in your December 15th article, Supplemental Cartel Manipulation Proof, that not only are silver American Eagles set to hit a new record for the second year in a row, as you've just noted, gold is also enjoying unprecedented demand as fiat currencies melt down. And I just want to read a blurb from your article on the 15th, Andy. You wrote, yes, 77 Sunday night sentiment attacks in the past 78 weeks, whilst no other market materially moved. Actually, tonight took a full 2 hours before the typical cartel raid, with oil sitting at the same negative 1% level as it opened at 2 hours ago, as opposed to most weeks when the attacks start within 15 minutes of the ultra-thin Sunday night open, which you have long documented, Andy. And you write, think these monsters aren't terrified? Amazing how much more intense the attacks became in the weeks leading up to the Swiss vote, let alone now that the end game of global economic collapse is upon us. I read that for folks because I want people to understand. As Andy notes, gold is pretty much flat in US dollars this year. You can thank the Fed, you can thank the manipulation, and you can thank this brief respite with a strong dollar. Because as Jim Willie notes, Andy, and he just noted this again recently, he predicted that the dollar would rise right before it collapses. And the dollar is the only currency really showing strength, and that's because of manipulation, and that's because of the New World Order trying to protect their fiat money game. But it's not working. The Swiss National Bank, as you note, has now moved to negative interest rates as their citizens have turned their back on gold.
Well, let me say about the dollar that I couldn't agree more with Jim Willie, and I've said this all along. Pardon my disagreeing with some very important people in our world talking about dollar collapses. I've said all along it's pretty much impossible. There is not a chance in hell that the dollar index could ever fall to 50 because there's no way that trauma to the global economic landscape could cause the euro to not implode beforehand, let alone Japan, which is 20% of the dollar index. I mean, Japan's on the verge of imploding as we speak. So I don't think that narrow index, which really is basically the dollar versus the euro and the yen, could ever go down that low. I think completely that 150 is more likely than 50. And it's exactly what we're seeing right now. Again, I'm looking at my screen and I see, and I've been talking about this forever. I wrote an article called The Single Most Precious Metal Bullish Factor Imaginable about this ridiculous volatility of currencies and crashing of currencies. What is going on now is not obviously a strength of the dollar. You'd have to be a rube or a boob to actually believe there's anything relatively strong about either the U.S. economy or, God forbid, its financial situation. What is happening right now is that people are fleeing out of fear because of this global collapse that's going on. Look at commodity prices, look at currency prices, look at economic activity. They're fleeing into the most liquid assets. It's called safe haven. They're simply getting out of every currency and into the dollar, just like they did in 2008, which has nothing to do with the dollar fundamentals. And for that matter, the reason interest rates are falling for sovereign yields around the world is obviously not because the German and United States and Japanese governments are more creditworthy. It's because they are front running QE to infinity. Global money managers know that they have to be long. They're not going to short treasury bonds and say, well, one day they're going to collapse. They're going to front run altogether until rates go down to zero, and then ultimately you have hyperinflation. Just like Willie says, the dollar will surge before it collapses. Interest rates will plunge to zero. That's what I've been saying all along until they hyperinflate. And of course, you have basket cases like Russia and Greece and Venezuela, which are in such bad shape that basket cases, they fall apart. But that's what's going on right now. And as for the Swiss National Bank, I mean, holy cow! First of all, I thought the gold attacks going into that referendum were bad. But just to show you, as you said, how terrified they are, what they've done this week going into this pathetic FOMC statement. It's like the world, the entire world was going to change if they couldn't say considerable time or not considerable time. And as for the Swiss, I mean, my God, talk about desperate. I mean, not only did this Thomas Jordan, I call him Lady Macbeth because he doth protest too much to gold, leading up to the referendum. Not only did they dupe the Swiss citizens into voting against this referendum, which could have saved the country, but since then the Swiss franc has plummeted along with the euro, which, as I write today, is sitting at multi-year lows. It's in free fall right now. But this morning, the Swiss National Bank actually went to negative interest rates while the Swiss franc and the euro were plunging already, because despite the not passing the referendum, the Swiss franc peg was still about to break. I mean, it's gotten so strong, it's like right at the border of that peg. So we said, no, we're not going to let that happen. We're going to take our negative rate to negative 0.25% versus the ECB's negative rate of negative 0.20% in the ultimate currency war. So, you wonder why, when the Bank of Japan expands Abenomics at the Bank of the PBOC lowers the value of the yuan, or why, when the ECB gets weaker, the franc weakens itself. I mean, this is a total, utter implosion. And then, of course, you have all the currencies imploding simply because they are commodity currencies. I mean, from the Australian dollar, the Canadian dollar, the Indonesian rupiah, and the Venezuelan bolivar, and of course the Russian ruble. I mean, this is everything falling apart at once right now.
Let's hit on this Swiss National Bank move to negative interest rates because it's easy to mow over that with all of this incredibly intensely bad news. What does it mean that they have moved to a negative interest rate? Does it mean that they are now fleecing savers? What does negative interest rates mean, Andy?
Okay.
How can they do it? How is it even
Well,
possible?
first, let me say this. I mean, I don't think, and even the average non-financial listener to this will understand this. Okay, I have never in my entire career seen anything more ironic than the fact that the Swiss National Bank is being forced into negative interest rates after the Swiss referendum failed. Do you realize what they were saying was, well, if the referendum passes, and therefore we have all this gold, and the Swiss franc will soar in value, we may have to go to negative interest rates to push the value of the franc down because it'll be so strong. Meanwhile, it failed. They're not going to get any gold into the system. And still, people are so fearful of the ECB collapsing that they're still buying the Swiss franc at record paces to the point where just 3 weeks after the referendum failed, they had to institute negative interest rates. Now, the fact that it's 5 basis points less than the ECB is just outright comical, but it just shows you how determined they are to destroy this currency. And again, I can't emphasize enough that the Fed's balance sheet is now 25% of GDP. The ECB's is 20%. The Bank of Japan's is 50%. And the little Swiss national bank, theirs is 80% of GDP, and it's all happened in the last 3 years as they've tried to defend this peg, which is ultimately going to die. So again, they are literally impaling themselves at a pace even I couldn't imagine could happen this fast. And what does it mean? Well, no, it doesn't mean they're imposing it on savers. They're imposing it on the banks in their system, like in the Fed system, Goldman Sachs gets its ZERP money and then puts it back in the Fed for 25 basis points. In ECB, if you try to do that, you get negative interest rates because they think, well, they'll lend the money if they don't put it in the bank. Of course, they don't lend the money; they just put it in the stock market because they know the PPT is behind them. But what eventually happens is they do have a negative spread on that money. So eventually, it starts to seep its way into the system, and we've seen banks in Germany now starting to one at a time and actually impose negative rates on savers. Or more, what you more likely see, and you see it here in the States too, you'll still have your barely positive rate, like a couple of basis points, but then they institute all these fees on you, so you really do have a negative rate. So ultimately, the NERP in Switzerland, and Switzerland already has some of the lowest rates anyway, because people, think of it as a safe haven. So it's going to definitely impact the saver. And as we know, despite them saying their CPI is so low, they have among the highest cost of living in the world in Switzerland. Geneva and Zurich are two of the most expensive cities in the world. And again, they just had a referendum that was voted on earlier this year to raise the minimum wage to $25 an hour, which would be twice the highest rate here in the States. So they already are getting destroyed by inflation, and now they are going to, in fact, see negative rates in some banks.
All right. Well, this is just insane. All of this is so hard to track, and I just want to remind people how lucky we are because of the manipulation and the quote unquote strong dollar. How fortunate we are to still be able to buy precious metals more cheaply this year than we could last year. It's really quite stunning. So I want to talk to you about Russia and Putin. I think the New World Order is targeting Putin specifically and the ruble through lower oil prices. That's my take. I want your take. I could be wrong. And I also want to talk about the FOMC meeting this week. Should we talk about Russia first or the
Yes,
Federal Reserve?
yes. Again, when people talk about these, my apologies, conspiracy theories, I'm not saying that it's not true that there are not efforts, to get Putin. After all, I mean, Mitt Romney did call him our greatest geopolitical foe, and Obama did just sign a bill yesterday to send, quote, lethal aid to the Ukrainian government,
That's right.
et cetera. So, I mean, there's no doubt, especially with their de-dollarization efforts and their new SWIFT system, their alliances with China and many others, that they clearly are becoming more of a monetary foe than they ever have been, let alone their very, very open, transparent purchases of gold. So yes, it is certainly possible that behind the scenes something is going on, but I can't speculate on that because I don't know that that's true. It may be true, but the fact is the price of oil is not falling principally because the United States wants it to hurt Russia. It's falling because there's a massive mismatch in supply and demand. that is killing everyone. It's killing the United States more than anyone. Our shale industry will suffer more than any other country, certainly more than Russia, which has a very, very low debt burden compared to ours, which is all high yield. So we're going to be hurt just as much by this as anyone. And certainly Saudi Arabia has no interest in impaling itself. I mean, this is a price war that's being caused by an oversupply compared to demand. As for, is there a bigger war going on? Well, if there's not an overt attempt, I can guarantee you, and Putin said it at his speech this morning, I mean, he's as pissed off as he's ever been. So whatever Cold War we have is going to get a lot hotter, whether it's economically or, God forbid, otherwise in the coming weeks and months.
Yeah, that's right. I believe that the criminal Congress is dancing merrily toward the precipice of World War III as they literally are using war language and backing Ukraine with lethal force. The Ukrainian Western-backed puppets, I might add. So, with NATO surrounding Putin and Russia, those of us paying attention know exactly what's going on geopolitically, and it's ugly. It's scary because it seems to be our nation, our leaders that are beating the war drums and hell bent on taking us into World War III. That's my opinion, and I
Yes,
think
and China is publishing articles in their state-run things saying that they're going to support the Russians and
that's right.
bail them out if necessary, which of course they will, because they're very intrinsically tied economically. They just signed the Holy Grail natural gas deal. They're doing this anti-SWIFT system together. I mean, there's no doubt that they are on the new axis in the eastern part of the world, and people are joining them. So I have no fear for them. And again, the U.S. debt to GDP, that's before the off-balance sheet stuff and the unfunded liabilities, is 100-something%. In Russia, it's 50. It's 15%. I think it's 13%. They are not in this economic crisis right here compared to where the West is. So I wouldn't worry too much about them, but I certainly would worry about how angry they're going to be. And then when you talk about the FOMC statement, again, we're taping this on Thursday. The Dow is now up unbelievably 600 points in less than 24 hours.
It's insane.
And the FOMC statement, I mean, we know about the pre-FOMC drift. That's where all the FOMC, S&P 500's gains comes from before the FOMC statement, the 24 hours before. In this case, it didn't work, so it's all after. They said absolutely, utterly nothing. My audio blog, which I just taped, I mean, it's at 9 pages long. All this talk, they're going to take out considerable time. They're going to take out considerable time. They got Bill Dudley at the New York Fed from Goldman Sachs to say so. They got John Hilsenrath from the Wall Street Journal to say they're going to take out considerable time. They're going to take it out. And of course, taking that out wouldn't mean anything. I mean, yes, they've got this scam that's been going on for 2 years. They've created the word tapering. Now it's considerable time and patience and all this stuff. But the fact is, they're just trying to hope and pray that the economy will get better so they can wean the markets and their balance sheet off of record low interest rates. But they can't, because the global economy is worse than it's ever been. Look at the economic data. Look at today's economic data. It's worse than it's ever been. Look at commodities around the world crashing. Everything is as bad as it's ever been. So all they can do is manipulate markets. And when it comes to the actual statement, even I was amazed. I mean, even Zero Hedge puts out an article that says, meet the new Fed, no considerable time, they're just patient. Did they not read the statement? Considerable time, they not only didn't take it out, it's literally the exact same statement. The only difference, and I read it verbatim in my audio blog, the only difference between last month's statement and this one is they said, yes, we believe we've maintained it for a considerable time and be patient in doing so. I mean, that's the difference. They added the word patient. So I'm not sure why anyone thinks there's anything different. Not that it would matter anyway. It doesn't change their stance. And by the way, the Fed, they asked the Federal Reserve governors, where do you think rates will be at the end of 2016, 2 years from now? As if they know what's going to happen 2 months from now. Well, last month, the average was 2.9% for the federal funds rate 2 years from now, and now it's 2.5%. So even though they write in the statement, oh, we're equally balanced in the upside and downside potential, the fact is that they are terrified of what's going on. In fact, you know what they call the oil price decline that's happened? Oh, just since last month's statement, oil's down, 40%? Right. The whole world's falling apart, currencies, commodities, stock markets. They said it's transitory. We still think that the labor market will increase, especially when transitory factors like oil price declines go back to normal. I mean, they are so fixated on nothing but the stock market that they think that they can get away with writing anything as long as the stock market, the PPT is there to support it, which is why the title of my audio blog has to do with a record low credibility for central bankers. That is until, while I was in the process of writing it, the Swiss National Bank comes out with their negative interest rate policy. Just the last 12 hours alone, of which I've slept none, have been the most remarkable in the way of utter stupidity across the board of everyone in the financial and political establishment that I've seen in my lifetime.
You know, you're one of the best researchers and journalists out there in the field of economics because you dot your I's and you cross your T's, and you really do a great job, Andy, of tracking where we've been, and then you do a wonderful job of going back historically and saying, this is where we were, this is what they said. Do you guys remember what they said last quarter? Here's the language. It's hard to do that. I want to give you credit for it, and I want to ask you this, Andy. In your estimation, do you think this word best describes what we are seeing globally right now? Is this unprecedented?
Well, yes. Look, it's funny you use that word because I wrote an article back in, I think it was summer of 2011 called Unprecedented. And in it, what I said was within 12 months, things are so bad. This is again, summer of 2011. I said, I think the euro is going to break up within 12 months. Okay. Well, guess what happened exactly 12 months from that article? The euro was about to break up. And then Draghi came out and said that almost to the year, he said, I will do whatever it takes to save the euro. Well, let's fast forward to 2.5 years. Now here we're at the end of 2014, and Draghi actually has to do whatever it takes, which is the unlimited QE, the NERP. He's seeing the Swiss National Bank trying to destroy itself against the ECB. The Greeks had snap elections yesterday, where the first round of elections supported the anti-austerity, anti-euro group, Syriza. So things are falling apart. And therefore, again, what we've just seen between the Swiss National Bank market manipulations of propaganda and this FOMC statement, I mean, you think that what they've done to markets, to support them and cap gold, going into this FOMC statement, which is meaningless, it just shows you how terrified, how unprecedented the fear is of the powers that be, of everything falling apart. I mean, you look at the oil price on your screen at $56. I'm looking at copper at 286. I'm looking at all these currencies plunging everywhere. Commodities, currencies, stock markets plunging. And yet they got the FOMC saying, we're not worried about anything. You can't make this stuff up. You really can't. And I mean, I have never been more terrified for what's coming because it's so unsustainable on so many levels. Everything that they've done, you look up, as you said, historically, you look up 3 months later, to 6 months later, a year later, and things are much, much worse, socially, economically, and politically. And so you talk about the record demand for gold and silver this year versus the record demand last year. You think it's going to get lesser going forward next year? Are you kidding me? And next year we won't even have the supply because the mining industry has been so devastated by all the capital, by the capital strangulation of 15 years of cartel suppression. There's going to be no production of gold and silver a couple of years from now. I mean, I say that flippantly, but we did our webinar. I mean, silver production could fall 50% in the next 5 years at the rate things are going.
Yeah, and I talked to Rick Rule recently, and I noted that silver producers are losing money at anything below 19 to 20, most of them, and he noted that many of them are losing money at silver below 24. As we wrap up here, Andy, I just want to recap maybe the top 5 examples of the collapse. Okay, you can draw on anything that we've just discussed. I'm going to provide the first 2, but you and I have been documenting the collapse for a very long time, and as the collapse begins to quicken, things change faster and faster now on a daily, even a bi-daily basis. So I'm going to start. Here's the top 5. You pick 3. Here's my 2. The Treasury, as Alt Media has noted, Andy, is seeking $200,000 worth of survival kits for their bank examiners. Why would bank examiners need survival kits unless the collapse would come like a thief in the night? And they don't know when it's coming, but they know it's coming. That's number 1. Number 2, $18 trillion in debt. We just passed the $18 trillion debt mark in the United States, and a $1+ trillion spending package was just signed by Obama, and buried within it was Citibank written language providing that U.S. citizens now are on the hook for some up to 300 trillion in derivatives, apparently. I can't think of two better signs more recently of the collapse. Can you name three?
Oh, I can name a million, but the ones I'm going to name are not going to be super specific ones. Like you're
Sure.
talking about specific events. To me, the things that are the most obvious are all anyone has to do is look at commodity prices around the world. I mean, it's not just oil, it's everything. It's iron ore, it's base metals, it's cement, it's pretty much anything. Even a lot of food prices are starting to fall right now because people just have less money for food. I mean, it's that bad. That's number one. Number two is currencies. Again, as I said, the single most precious metal bullish factor imaginable. Currencies are crashing. They're crashing today. They're crashing this month. They're crashing this year. So many currencies are at all-time lows and falling rapidly. It won't be long before the average currency is doing what the Russian ruble is doing. That's number two. And number three is these votes around the world. I mean, we knew that the Swiss gold referendum was out there, a year ago. But I never thought it would actually come to being. But we also didn't realize. I mean, think about how much has gone on just in the last 3 months. We had Scotland. I didn't even know about that one. Scotland almost seceded from the UK. Catalonia voted 81-4 to secede from Spain, and believe me, they're going to do it in time. Venice, Italy is probably going to be voting very soon. These Greek snap elections just came out of nowhere. And very likely next year, Syriza is going to be the winning party in Greece. And Syriza is, as they call it, anti-austerity, which means anti-euro. And then, of course, these Japanese snap elections. Can you imagine that just this weekend, that Shinzo Abe was forced to call snap elections because his credibility has fallen to an all-time low, and yet he won? I mean, it's really remarkable because you're going to see in the next 12 months, I'll bet another dozen of these votes. And a lot more are going to be like Catalonia than they were like Scotland.
Well, there you have it, friends. Our guest has been longtime friend Andy Hoffman from Miles Franklin. And if you want to take advantage of artificially strong dollar and artificially low precious metals prices, you can call Andy and the folks at Miles Franklin. Andy, why don't you give them that phone number, will you?
Of course, 800-822-8080. And as always, you can email me at ahoffman@milesfranklin.com.
Well, Andy, until we speak again, I guess 30 days from now, any predictions on how much more down the economic road of collapse we will have come?
Well, it's only a matter of if we slide down slowly or it's a ruble-like thing. I mean, it's coming. The ruble-like thing is coming, and it could just as easily be tomorrow as in 3 months from now. I mean, things are that bad right now, and that's why, I mean, God, when people have the ability to buy silver at $16 and gold at under 1,200, I mean, I am just shocked how few people realize what an opportunity of a lifetime this is. Not to, quote, make money, to save themselves.
Yeah, that's right. And to look at it as savings, which we've said for a long time. You accrue some physical precious metals, view it as savings. Just view it as savings and sock it away because those black cloud days are coming. Andy, thanks so much for your time. As always, we really appreciate it.
Me too. Thanks so much, Sean.
All right, guys, thanks so much for listening. Thanks for checking us out and supporting us at sgtreport.com. We truly do appreciate it. We appreciate you, and we wish you very happy holidays ahead. Thanks, Andy.
Thank you.
Bye, guys.